Good morning and welcome to today's morning report on Tuesday the 19th of July with me, Pro Market Analyst at Handtech Markets. We've got a general risk-off sentiment that is sort of coming through the markets now, and that's impacting across equity markets, across Forex, across commodities, and also bonds as well. It's very interesting that we've had this just slight shift as markets have started to consolidate in the last couple of days. We're starting to get a reversal of some of the trends that we saw last week. Let me just show you first of all the fact that the Treasury yields are just starting to roll over. 2-year Treasury coming lower, 10-year also slightly lower, but not as pronounced as the 2-year. The oil price is an interesting one. It's still consolidating, but you can still see this sequence of lower highs. It's not really gone anywhere for the past sort of week or so, but still you've got these lower highs that are sort of keeping it underneath this key old support at 45.83. So the sentiment is generally sort of towards the negative on oil. Dollar is still sort of trying to break out. It's not quite making the move quite yet. The dollar is outperforming pretty much all the Forex majors today, apart from the yen. The yen is now starting to strengthen again. Again, all these sort of pointing towards risk-off, safe haven plays in favour. And I'll talk you through the yen chart in a bit. But certainly, at the moment, this is sort of the outlook that we're seeing across the markets today. So, what have we got in terms of economic announcements today? Well, we have got, starting with UK inflation at 9:30. You've got inflation for the UK that's expected to come in at 0.4% on the headline, so slightly ticking higher, and 1.3% on the core data, so again slightly ticking higher. This is the first data that we've had since the Brexit on inflation. And it'll be very interesting to see if the numbers start to be impacted by it. Obviously, Brexit only happened on the 24th of June, so not a great deal of sort of only 6 days worth of impact on the prices. But it more than likely next month that we see the real impact starting to come through. But certainly we could see an early impact today. Then at 10 o'clock we've got the German ZEW again. It'd be interesting to see the economic impact on the German ZEW because this is a confidence indicator. So it could be, well, the expectation is for 9.0. So it'll be interesting to see if that undershoots that following on from the Brexit. But obviously last month we had 19.2, which was actually the highest since August 2015. So that was a pretty decent uptick, but back down below 10 again on the expectation there. And this afternoon we've got the building permits and housing starts, both of which are around about sort of 1.15 million is the expectation there. So that takes me to my chart today, which is the Aussie dollar. Now this is again a sign of risk sentiment just sort of flowing out again towards the safe havens and away from the riskier commodity currencies. We had this bearish engulfing candle on Friday for the Aussie, and yesterday's move couldn't get any real traction to the upside. And again, I mean, I started looking at this yesterday afternoon, having had that bearish engulfing pattern pretty much confirmed still by the lack of recovery that we saw yesterday. We also saw a stochastic sell signal, which has now been confirmed today by the downside pressure that is beginning to grow actually on the Aussie. 1.3% down on the day, sort of 100 ticks down, which is, if you see on the hourly chart, it's sort of broken below this initial support that was 75.75, which sort of implied a breakdown of around about 100 ticks, so you'd say 74.75 is the initial target. You're not far from that now, and it's continued downside, the downside that we've seen in the Asian session, and as the Europeans have come in, they've sold it again, so it is accelerating to the downside. You'd certainly say on these momentum indicators on the hourly chart that you're now negatively configured. Look at this recovery. You had all the moving averages rising nicely. They've all crossed over in bearish sequence and now falling. You've got the momentum indicators on the hourly. MACD lines are the ones that I'm interested in. Having previously throughout the bullish move to the upside in the first few weeks of July, they've now turned negatively configured on the MACD lines and falling away. The stochastics are negative. The RSI hitting below 30 and seemingly sort of continue to the downside. You've got a bearish divergence on these momentum on the RSI as well, with that high that we saw on Friday. So all these factors are suggesting that downside pressure is growing and that selling into strength is the way to play the Aussie now. You'd say sort of the resistance comes in of today's resistance 75.33, so between there and 75.75 would be ideal sell zone if you've got a minor recovery. But I think that what we're seeing is further downside pressure. You've got 74.67, which is the initial support of these couple of lows from the 7th and 8th of July, but it certainly looks as though that we're going to be sort of pulling back, probably a continuation of a pullback actually, maybe even towards 74.04, which is this reaction low that we saw on the 6th. But as I said, on the Aussie, it looks like we've rolled over that. That was the pre-Brexit high, 76.48, and we had basically a false upside break of that on Friday, and we're now seeing a correction back to the downside again. 74 figure is an old sort of pivot, and as I said, it could well be coming back towards sort of 73 figure as well, which was these June lows. So if the selling pressure starts to accelerate, you could see that going. So selling into strength on the Aussie today. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.